Thank you, Jonathan. It's great to be here and to see the Perth procurement profession coming together for this event. It's been a long time between drinks, and so a special thanks to our event sponsor, Access Group, and to PASA for persisting through COVID to organise a WA event. It's a bit of a cliche to say that COVID has changed the world, but it has. And for today's presentation, I'd like to talk about one of the consequences, inflation, and what we as a procurement profession need to be doing to protect our business and to take advantage of any opportunities that might become apparent. My objective for this presentation is simply to share a point of view and to offer some food for thought around dealing with inflation, within the context of your own business, of course. I'd like to leave you with a better understanding of inflation and also point to some metrics and useful trends that you should keep an eye on to ensure your spend strategy remains forward-looking. I'd also like to discuss the potential consequences, which will provide you with a better appreciation for the risks. And then lastly, I'd like to share some tactics which can be deployed to protect your business in an inflationary environment. Let's first all get onto the same page as to what inflation is. Inflation is a decline of purchasing power of any given currency. This means you need more currency to purchase the same item in the future. The inflation that you and I experience as consumers is best measured by the Consumer Price Index. When I was first writing this presentation back in June 2021, there was some uncertainty around inflation. 12 months on, and there can be no doubt that we are living in an inflationary environment. To some extent, the USA is leading the pack and perhaps exporting inflation to the rest of the world, as reflected in the relationship between the weak US dollar and the increasing cost of commodity prices. Australia's inflation hit a 40-year high, but interestingly enough, China seems to have rather a tame inflation rate, despite higher commodity pricing. I only think that the COVID zero policy has hampered inflation. I think the best indication of inflation, for those of us in procurement, is that of the Producer's Price Index, PPI. This is the change in price the producers pay, the change in input costs. Since we're in Perth and this is a mining town, I think we ought to discuss the most relevant index, which is the PPI Coal Mining Index. There doesn't seem to be any indices for the other mining sectors, so let's just stick with this one. The coal industry has experienced a 9.1% increase in prices over the last year. That's the highest since records started in 2013. I think there is more to the story though, and I'll include another stat that I think all procurement professionals should keep in the back of their minds. Accountable US, a government watchdog, carried out an analysis on companies operating in the food, energy, commodities, healthcare and shelter sectors. These companies increased profits by $151 billion and handed out an additional $28 billion in dividends to shareholders. This does make you think about our readiness to simply accept price increases because we all know that there is inflationary pressures. I might be a little skeptical, but I reckon any organization worth its salt will be asking for a price increase. It's what everybody expects. Well, I'm not sure about you, but I'm not interested in eroding my margins so that others can increase their profits. It's very clear that we are in an inflationary environment. However, was it possible to forecast that this was likely to happen? Could we have predicted this outcome and incorporated measures in our category strategies to mitigate the impacts? Well, often, inflation follows a black swan event. We expect the economy to struggle, and as a result, we intervene, and in most cases, we overstimulate by stoking demand beyond supply. Governments all around the world were very concerned about the slowdown in the economy as a result of the COVID pandemic, not to mention war in Europe. So many levers were pulled to stimulate economic activity. Cash was injected into the economies, and low interest rates facilitated the distribution of even more borrowed cash. We've had a bit of a perfect storm: low interest rates, increased government spending, more cash in circulation, and supply chain disruption. Until recently, the only inflation headwind being low wage growth is now also increasing at an accelerated rate. It seemed the only tool available to us to tame inflation is to increase the cost of money by increasing interest rates. So what does this all mean for business? Well, if you're operating in a highly competitive market and/or you're a price taker, your margins are likely to get squeezed due to increasing input costs. Your customer may be prepared to accept some price increases, but this may not offset the increases you're experiencing, and so your margin will be under continued pressure. If you're in the commodity industry, you're likely to be enjoying the buoyant prices at the moment, but I think you would be short-sighted to think this is going to last forever. Eventually, increased interest rates are going to dampen consumer demand, and this will flow through to all commodities. And when that happens, you're going to want to be in the lowest cost producer segment so that you can survive through to the next growth phase. I've noticed that a number of my clients continue to experience short supply. There just isn't enough product going around. Not only does this have a huge impact on price, but could have a significant impact on your ability to produce. Not only is there a shortage of product, there is a continuing supply chain disruptions, and so even if you find the product, it may be difficult to get it to where you need it. Most governments around the world are going to want to tame inflation, and as I mentioned, the only way to do this is to increase interest rates. Let's be honest, we haven't really had to consider the cost of capital for a long time, but you can be sure that in the near future, the cost of working capital is going to feature in your negotiations and be a part of your value delivery calculation. There is going to be a need to balance an operational desire to stock up because of the short supply issues, but at the same time, the accountants are going to be more hawkish about tying up cash in stock. There is also going to be a softer dynamic at play, stakeholder expectations. As a broad observation, I noticed that suppliers are feeling more comfortable about putting through rate increase requests and doing so more frequently. There is a general reluctance to lock in rates for more than 3 to 6 months, unless you are prepared to pay a premium to cover additional risk. And even in some cases, we're not pushing back that hard because everybody is expecting prices to increase. On the other hand, there are genuine inflation costs that are beyond our control, and our suppliers are going to need to pass these on. What will our senior leadership accept? Do we risk shifting away from strategic partnerships to assume a more tactical approach when dealing with price increase requests? I believe these to be some of the key inflationary impacts on business procurement, and now we understand the impacts, let's walk through some of the tactics that we can deploy to mitigate inflationary risks. First of all, you're going to need to focus your efforts by identifying those spend categories that are material and most at risk of inflation. Start by determining those categories that have the greatest impact on business margin and rank based on the extent to which inflationary pressure exists. Speak with your vendors and gather independent views on the quantum of expected increases. Consider your contractual position, i.e., did you lock in prices 2 years ago? Does the contract run for another 12 months, or is it due to expire? Once you have completed your risk assessment and identified those high-risk categories, you can structure your team accordingly to ensure best results. Now that you know the priorities and the team is focused, you need to build a deep understanding of the economics behind the product or service being purchased. Understand your suppliers and your suppliers' cost drivers. This can of course be done by working with your suppliers. It is advisable to validate what you're being told by seeking out a third-party opinion. Don't just accept a price increase. Ask your vendor to provide evidence of the increase, and also work with your vendor to support them with tactics to managing their escalating costs. Be sure that the vendor is not just pointing to changes in an unrelated cost indice, for example the coverall CPI index, to justify a price increase. Another important tactic is to continue to nurture relationships, not just with your vendors but also internally with your business stakeholders. Closer internal relationships will help to integrate across the entire business and out to the supplier. Sharing demand forecasts, volumes, and timing will help your supplier plan better and better allow them to meet expectations. You also don't want to be in a situation where you've left it too late and now you are desperate. This will deleverage your negotiation strength. There will be times when you receive a request for an unacceptable price increase. This presents an opportunity to work with the business to remove waste, maybe even reconsider substitute products or reduce scope. Business leadership will have a greater focus on costs, and so procurement should be proactive and provide the transparency on actions and progress, managing expectations and celebrating cost avoidance outcomes. Don't lose sight of the overall supplier performance, and in some cases, you can ask for improved performance in return for a price increase. The last aspect I want to talk about is an old favorite, innovation. The best time to innovate is when times are not so good and it's a matter of survival. Innovate with the supplier's perspective in mind. What would be value for their business? Time, brand, association, relationships, etc. Think about the deal from various perspectives. Maybe no deal, maybe a longer deal, maybe an early extension. Scope is a bit of a holy grail. There's often huge value to be unlocked if the scope can be trimmed back. Do you really require the platinum service? I believe being creative in looking at both the business requirement and the supply market capability through an innovative lens to be the most valuable technique to combating inflationary pressures. So, let me quickly summarize the tactics before concluding. Prioritize the spend categories and the efforts of your team. Dig deep, really understand your supplier's cost drivers, ignore the headlines and get the facts. Continue to work on relationships, in particular internal relationships. Innovate and then innovate some more. Procurement is both an art and a science. We're going to need a lot of art to work our way through this inflation crisis. Is there a silver lining to inflation? I think so. I think inflation is going to force us to value cash more. It's going to make us more careful, more selective about how we allocate capital. For far too long, some businesses have been operating on a dream, in an environment where shareholders have been prepared to accept little to no return, because even that was better than holding cash. The onset of COVID promoted procurement and supply chain to the forefront of business leadership minds, and now inflation is going to demand the very best from our teams, and in my view further push the value that we can deliver into the realm of business critical.